Good day to one and all. This is Dr. Sivaraman of iknowindices.com. Today we are on Friday, 23rd September. So I'll be reviewing the forecast what I given it on 19th of September on Monday. So during this Asian session live market analysis and the forecast webinar, I am going to review the forecast what I have given it on Monday, 19th September. Then we will also do the market reading for today to find out how exactly the players intend to make the moves for the weekend, and also find out how the players have respected the range in which the currencies are expected to swing, which I displayed it on 19th of September. So to start with, we will go into the details of the derived forecast. So the derived forecast, I give it on Mondays and I review it on Friday, just to give you the impression that how reliable the forecast is. And also, we fine-tune the forecast using the market reading and the live market analysis. I am also doing it before you during that of the Asian session webinar. Thereby, you'll be able to understand how every day we'll be able to fine-tune our forecast and find out where exactly we can enter and where we can exit. So that set of decisions we'll be able to take so that our uncertainty will be reduced to a greater extent. Then, in the event if the market goes against us due to some knee-jerk reactions or due to rumor or certain events, etc., then in such a situation, we cannot afford to lose our equity. And we have to necessarily use a risk limiting factor. And that risk limiting factor will be using the hedge. And then we try to use the trading strategy if the position is hedged. If the position is not hedged, the hedge order will be equal to that of a stop what we keep in normal platform. So in the event if the stop is not filled, then we can simply remove the hedge order and keep stop at entry and then try to maximize the profit using the trailing stop. So we need to use the trading strategy, which is very important irrespective of the forecast, in order to earn nicely from the market. Now this is the forecast what I given it. And on 21st of September, Wednesday, I was giving the Tracking the Forex Market Together webinar. And that I gave it in the form of two parts, one during that of the European session and another one during that of the US session. And I was taking the positions and showed you how exactly I had taken the appropriate decision to enter into the market, following the type of moves the players are making in the market. And I was not available during that of the FOMC release time. And I gave it beforehand, even on 19th itself, I gave the forecast that for FOMC, they are expected to spike Euro and GBP on the upside. And exactly after that of the FOMC minutes, FOMC meeting, and also of the statement and the press conference, by after 18:30 GMT, they started making a big rise as an upward spike. So how I was able to give this beforehand and much in advance? So that is possible provided we use the appropriate understanding of the players. So the players are the one, they are making the moves in the market. And try to read the impulse of the players. And once you read the impulse of the player, then we know how exactly they intend to make the moves in the market. Then also, they have specific type of moves. Why they are doing it? Because they wanted to trap the traders and earn money from that of the traders. And so they create the market sentiment. On 21st, you would have noticed that they have been keeping, on Tuesday, they just made a big slide In the case of Euro and GBP came to that level of 1.2950 area. Euro came down to that level of 1.1123, and then they have been holding it on Tuesday and slowly gained the levels on Wednesday. And people were wondering what could be the type of move in the market. And many were expecting that US dollar is going to be the king forever. And then after that of the FOMC, the players gave that interpretation using their mouthpiece or the specified analyst that the Fed chairman was hawkish, but the statement was dovish, and this sort of statements and this sort of explanations they are given. And as a result, Euro and GBP started gaining the levels. And you know that players have prepared it beforehand. That is why when people were worrying about FOMC and the players made the drop in the case of Euro, GBP as well as USD and then accumulated the buy position when the traders thought that it is better to liquidate the long position before FOMC. If they make further big drop, then we'll be caught. So that's sort of impression they have given it by creating a bearish sentiment in the market. And after buying all that sells at the lowest level, liquidating the sells and also liquidating their buys and also stopping out of the positions, which has helped the players to build up huge buy positions at the lowest level. Then afterwards, after FOMC, even though there is no change with regard to interest rate decision, they gave simply an explanation, hawkish, dovish, etc., and made the rise in the case of Euro and GBP. Then everybody thought that, okay, Euro and GBP will make straight gaining moves, but without understanding that they have to continuously track, because the players need to earn money from that of the traders. And by showing simply the highest level or the lowest level in different currencies, they are not going to be benefited. And they have to create the market sentiment, act against that of the traders. And continuously they have to do that. And for that, they are making now the swings near that of the low and making a dip in the case of Euro and GBP, pretending as if they don't have enough strength to gain the levels. So that is how they do it. And also in the case of USD yen, they gained it almost to 101.50 level and then started making the slide again, just to give the impression that USD yen could come down further. But what they intend to do is, they want those who have taken the long position around 100 area to liquidate the long positions in a hurry, and afterwards slowly from European session, from late Japanese onwards, they will start gaining the level above that of the high and continue to gain it upward. After gaining the levels in the case of USD yen, people might be thinking that Euro and GBP might drop and show the US dollar gaining move, but slowly they will tell some other story about GBP or Euro and start gaining the levels. And you know, as I told you, that the players rally the commodity pairs in advance, and later on commodity pairs lag behind during the weekend. So during that of the weekend, Australian dollar may not gain significantly, and similarly Canadian dollar, USD CAD may not drop significantly, but the majors will take the role and they will try to make big moves in the market. So you'll come across that Euro GBP as well as USD and to gain the levels during today, because as they have done the downward stop in the case of yen crosses and induce the traders to liquidate the long and turn short. Technically, people thought that GBP, Euro yen and GBP yen were likely to come down in a big way, but they created the field and induced the traders to take sell positions, started gaining the levels. So yesterday you would have noticed during that of the European session and US session, slowly they gained the levels in the case of Euro and GBP as an impact of FOMC. Then afterwards Friday, the weekend, they have to necessarily induce the long holders to develop the fear and liquidate the long with a lesser profit, and later on they gain more level induce the short sellers to do the short covering. So they are just holding now to induce the long holders to lose the patience and to get that impression. It is better to get rid of the long position with a smaller profit. But if you use the trading strategy, keep stop at entry and remove the hedge order, you can afford to wait for the big rise during the European as well as the US sessions and maximize the profit. So normally, impulsive traders fail to maximize the profit. But actually, when a position is in the money, we should be able to maximize the profit, but not simply waiting. You have to use the trailing stop and the trailing exit order. Thereby, you will be able to really maximize the profit. Otherwise, the players might show a big profit, but subsequently, when traders turn long after the gain, in order to do the breakout trade, the players will make the drop from the high, induce them, the long holders, highest level long holders, to liquidate before making further rise. So this is the normal scenario come across. Yesterday they gained the levels significantly in the case of Euro GBP and USD yen, and many would have just taken long position after the gain, and so they are testing the patience of the traders who have taken the buy position after the rise and sell position after the drop. Such traders are being trapped again and again in the market. And such people think that technically I'm short, technically I'm long, like that they may just give any sort of interpretation, but ultimately they, their patience will be tested and they might find it very difficult to earn money from the other market because they are not in a position to control emotions, and still they look into that of the technicals and fundamentals. In such a scenario, when people are emotional, they are bound to perceive their technicals in a different format. As a result, they buy after the rise and sell after the drop, and thereby they are not in a position to make a headway in making money from the other market. Now let us look into the of the levels in which the currencies were made the swings. So euro just came down to 1.1123. The estimated mathematically estimated low was 1.1150, and they were gone up to 1.1257. Just about 100 to 200 pips they gained, and they are expected to gain further upward nominally today. And next week they could go further higher levels. And in the case of GBP, they came down to 1.2946, even though they were expected to make further gaining more. They came down in order to handle the GBP crosses. And again, they started recovering to 1.30 level, and it went up yesterday to 1.3120, and they are likely to go above for Friday. And in the case of yen, they came down to 100.10, and as an extended downward move because of the BOAJ press conference on Wednesday I was explaining to you, and then subsequently they just gained the levels, and they are expected, then again they dropped, and now slowly they are gaining the level. They are likely to gain more levels during the day. Along with that of euro and GBP, will come across USD and also gaining the level. USD CHF might make sideways move, and all other the commodity pairs, Canadian dollar, Australian dollar, are also likely to make sideways move. And always keep in mind, the commodity pairs lead the rally and lag behind on Fridays, because the players focus and use their money to trade the majors rather than the commodity pairs at that time. They try to book profit in commodity pairs, holding the high and gaining the levels. In the case of euro and GBP, will give that impression to the traders. Aussie could also gain levels, but the players hold high Aussie and liquidate their long positions, lighten their positions, and release the usable margin and try to buy euro and GBP with that. So they also need to give the margins for that they make such strategies. So we need to understand why they are not making all the currencies to move, for the simple reason they have the limited money deployed in the market with which they are able to earn money. But for them, it is limited money. For us, it is a huge money they are deployed in the market. Billions of dollars they are deployed in the market to rig the market, and that too from different parts of the world. In the case of CHF, the estimated low was 97.50. They came down to 96.60 and come up to 97 level. They are likely to slowly gain the levels as well. And in the case of Canadian dollar, they are supposed to come to 1.29 area. They came down up to 1.30 and started gaining the level. And today they are expected to, the high they reached was 32.43. The estimated high was 32.50. And the mathematically derived level was 32.50. They've gone up to 32.43 and started making the slide. And they are likely to come down nominally below 1.30 today. Then in the case of Aussie, they came down to 74.80, and 75 was the expected mathematically derived low, and they are expected to go up to 78 in the process, and they have gone up to 76.75 and come down about 50 pips. So this is how they just make the swings, and also they cannot at a stretch gain in a big way or drop in a big way when the volume is less from that of the traders, because they don't make any significant profit by simply making a big rise or a big drop, unless and otherwise the traders get trapped and lose money in that process. So when the traders volume is less, they try to make a wide range consolidation for a prolonged period, and they are likely to breach that wide range consolidation and go to the higher levels in the case of Euro and GBP and drop around the US election in November. So before that, they are likely to gain significantly the levels. So keep in mind that suddenly they will just walk towards that and make big profit with their positions after gaining significantly and quickly the levels. So there is a way they make use of the election anxieties and try to earn money from the traders. Now these are all the initial lows and the highs there. I noted down by 3:30 GMT, and you come across here, Euro formed the low 1. Or the initial low was 1.1200, but they just breached it by 6 pips and come up slowly, and they are just done a brief downward extended move for about 2 hours to gain the level above that of the initial low, because they stopped cutting the new low afterwards. Then the high was 1.1212, and they are likely to breach and go about. Still, the spread between the high and the low is very, very low, indicating they are waiting for the traders to commit positions before making big moves. Then in the case of GBP, 1.3054 was the initial low. They came down to 1.3034, 20 pips below, and gained about 10 pips. And they are still holding below that of the initial low as an extended move on the downside. Stop cutting the new low, indicating that afterwards the intentional move will be on the upside. Then the high was 1.3087, and that they are holding it. And in the case of yen, 100.70 is the low, 101.24 is the high. They are not breached the low or the high. They are holding around that of the psychological level, 100.02 now, and they are likely to slowly gain the level to start with in the case of USD yen. Later on, you'll come across Euro to gain, and then later GBP to gain. Then in the case of CHF, 96.86 is the low that is not breached. 96.99 was the initial high. They just breached the high and formed the new high 97.06, and holding above that of the 96.99 or 97 level before making a drop, and this is an upward extended move before making a drop in the case of USD CHF. And Canadian dollar 1.3043 is the low, 1.3072 is the initial high. They went up to 75 and just breached and came down. So it is a brief upward stop and to 1.3075 and they started making the slide. And they are likely to breach the low and go below during the day. And Australian dollar 76.35 is the initial low. They just breached and came down to 76.28 and they are holding around the low as an extended downward move, and slowly they are expected to gain the level and gain above that of the initial high and hold above by end of the day, but not a very significant rise they could make. They might focus more on that of the majors. Now the trade recommendations, you can buy around the current level. The initial low was 1.12, so I wanted to buy it. Now that got filled 1.1197, you can take a buy and wait for the rise to book profit around 75 to 78 pips, and the hedge order can be kept at 1.1170. And in the case of GBP, I want to buy near the initial low 30.44, and we can just keep, you can take a buy now also and keep 31.45 as the exit order, and 30.20 could be the low. You will be able to hedge order to limit the risk. In the case of yen, about 101 you can take a buy, 102.20 they could reach, 100.60 you can keep the hedge order to limit the risk. And in the case of Aussie, they could come down to 76, little more, 76.05 or so, and then try to take a buy. Then later on they could go to 77 during the day. Slowly watch and use the trailing stop to book profit. And 75.65 you keep the hedge order to limit the risk. Now these are all the market timings. I just displayed it for you to have an understanding that a day is being divided into 3 sessions, and each session is subsequently divided into early, mid, and the late sessions. The early and the late sessions, they handle the majors. Mid sessions, they handle the crosses. And also during the gap time, they handle the crosses. They make false move during the gap time. During early and the late session, they make the stop-ins and also extended move. And during the session, for 2 sessions, they make the intentional move. So that is how we should be able to identify following the timings. So easily you will be able to understand what the players are trying to do it once you relate the market moves with regard to the different times of the day. Now you might be aware that FX Street is back with a new edition of Trader of the Year demo context, and you can just try it out, your trades in a demo trading platform, and you can register for the same. And the Hand Tech Markets is the broker. They are offering this particular competition, and you can register for the same and try to aim for the prices. If not the price, you can still find out how far you are able to succeed when you have a time frame to exhibit your skill set. Because that way, if you try to have a target and try to achieve it, you'll be able to really understand that a time-bound learning you'll be able to do, and that will help you a great way. And also that results is going to be public and monitored by FX Street and Hand Tech Market. So you will be able to get international recognition if you become a prize winner. So leave alone the quantum of prize, but the participation and earning a prize will give you a different boost to your trading methods and also in the earning process. Okay. I take this opportunity to thank FX Street for the facilities provided to present the webinar. I'll come back on 26th September. If there are any questions, you can ask me. I'll be willing to answer to those questions. You can ask the question in the question answer window. I'll be able to answer to the questions. Otherwise, I'll wind up the webinar. I don't see any question coming forward. So that shows that you are able to follow it, whatever I explained. So it is a real pleasure talking to you people about the market and also giving the inside information, how exactly the players are manipulating the market. And with the help of the algorithmic study, I'm in a position to give you beforehand how exactly the players are expected to take the market, either on the upside or on the downside, which will be of a great significance to you in order to take appropriate trading decision. Then you can use your own system also to fine tune your entry and exit so that you are not simply speculating. You are able to really focus on a scientific method of trading, and then subsequently you can use the trading strategy to limit the risk and maximize the profit. So that way you'll be able to earn consistently from the market without any market fear. So wish you all happy trading. Wish you very happy weekend. I'll come back on Monday and give you the forecast for the next week. Thank you one and all. Thank you, Fixed Rate.